Cashless Society here again. Just figured today was kind of a 2 video kind of day. I'm sitting here putting together another video for you guys, and I'm just watching Bitcoin continue to run. This is pretty funny. Now it's up 15%. So I think tomorrow might be another explosive day for Riot. As I just mentioned in my last video, you can see up here in the right corner, Riot, I think tomorrow is going to blow up. So we'll see. It's already up in the after hours. But yeah, I just wanted to take a quick look at this. What the video really is going to be about, though, is exit strategies. I keep hearing people talk about this, mentions of it on Twitter, and also friends, family, stuff asking me, what is the plan? And honestly, it is a great question, and it's a question that everyone should address. What are you actually doing, right? If you think about it, imagine, I don't know how much you got invested, only you do. But imagine if you actually hit those price targets, or that idea that you might have. Say you made $1 million, $10 million, $50 million. I don't know what your idea of a lot of money is or where you're trying to get to. But even then, what do you do if you actually get that? Do you go buy a Lambo like all the crypto memes and stuff like that? Or, why are you even here? What is the end goal? So I wanted to make a video about that really quick, and also kind of explain, why I'm in crypto and how, I might not be fully in crypto forever. But before I dive into that too, I will say that, right now, as far as asset-wise, I'm all in. I'm all in the crypto bucket, and I'm going to get into a little more in detail on that why later on. But, so I see a lot of people talk about exit strategies. Let's take a look at this guy. So, I don't know if this is even a real account anymore. At Andrew, whatever, P47809396, XRP Euphoria. Cool. I just grabbed this off of the internet as an example. So if you want to go check this guy's Twitter page out, of course, I don't want to be using his information without talking about him. So anyway, I think this is a decent idea. If you're gonna be investing, you need to have, I guess, some exit points in place, and this isn't a bad way to layer it. You could do the same thing with all your crypto, or you could say, hey, I'm 40% in XRP, and the 60% of the other stuff is what I'm gonna sell, which is fine. It all depends on how you want to layer it. But another way to look at it is to do that as well. Say, well, my only buy and hold is really XRP, or my only buy and hold is really Bitcoin or Ethereum, and the rest of my money is allocated to stuff I just am using to make gains, and then will eventually sell for whatever else. So you could definitely do this. Price targeted 10, I'm selling 12.5%, not looking back. $20, another 12.5. $50, another 12.5. Then at 100 and 200, I'm going to dump 25% each, and then another 12.5 at 500. This is as if you're just dumping the whole bag too. For me, I'm going to have a percentage that I'm for sure never getting rid of, especially if, this is going to be the new world of finance. Why would you want to dump 100% of your holdings? I think it'd be smart to keep at least 10, for that long shot that XRP does go to 1,000 or 10,000, or that long shot that Bitcoin goes to 10 million or 100 million. I don't believe in ever getting rid of all of it, the whole basket, But anyway, so taking a look at this is why I'm all in on crypto. I understand how all the money works, stock market, just market caps in general. You got gold in here. So you got all these large market caps, right? All the money. That's basically, as it says here, anything that can be considered money in any form, including bank or other deposits, notes, and coins. So this is like the dollar market cap of different fiat currencies all around the world. You got your stock market here at 67 trillion. All the money, obviously, about 87 trillion. Physical money, 34 trillion. Gold, about 8. And then All the way down the list, you got Apple at 1 trillion, just a company. This is higher than that now. I think they're at like 1.5. Same with Amazon. And then you got your tiny little crypto market cap right here at 202 billion. All right. To put it in even better perspective, this is basically a chart of all assets around the world, just assets in general. Sorry if it's a little blurry. This is the best one I could find. So, looking at these assets, you have all these different categories, right? You got crypto, Apple just for demonstration, gold, stock market, money supply, debt, real estate, and then your derivatives market. As you can see, this derivatives is just ridiculous. I think that this is where the bubble lies. Who knows what's going to happen with that? That's another story. But I think that crypto is going to find its way into each and every one of these asset categories because it can help boost all of these. You can run the entire global stock market on an Ethereum type blockchain. It doesn't have to be Ethereum. It could be Cardano. It could be any of them. But the point being, you can run the stock market on top of public blockchains to make it run more efficient. Like I said, right now the DTCC is basically the clearing agency that handles moving all the stock back and forth between major companies like Schwab, Fidelity, and so on. You can replace that company with a blockchain in Ethereum. So this stock market could all move into crypto, and obviously Apple being one of those. Gold can also run on top of crypto. The same thing with the money supply. Obviously that seemed to be the first target right here, was replacing fiat. Debt would be bonds. That can run on crypto. Real estate, you can tokenize real estate. It's already being done on Tezos blockchain. And derivatives, of course they can. I think crypto itself is going to be a derivative. And for those of you that don't know, all a derivative is basically an asset that derives its value from an underlying asset. So crypto, the token running on top of a blockchain, can be a derivative for a stock. It can be a derivative for real estate, gold, debt, and money. It can be all of these things. So I think crypto has the ability to absorb a large chunk of all of these asset categories. So that would put you at, if it could capture the derivative market, $544 trillion. So that as a whole is a what? 2,000 times percentage gain? 2,000x, which would be what, like 200,000%? I don't know. I'd have to do the math there. I'm not going to do it right now. But the point being, crypto, teeny tiny speck here with the ability to grow into one of these. It is a new asset class, and it can help boost all these other asset classes. So this is why I'm invested in crypto. Also, I'm young, so I'm taking on the most risk. But I'm putting my risk where I see the most potential for growth, period. That's why I'm over here. As this continues to grow and expand and capture some of this market cap of all these other assets, I want to move over here into the real estate category. And I'll tell you why. So, this article here, realestatecpa.com, it says why passive income beats earned income. So I just want to quickly read what I've highlighted and talk about it a little bit more. So it says, passive income from rental real estate is not subject to high effective tax rates. Income from rental real estate is sheltered by depreciation and amortization and results in a much lower effective tax rate. For example, let's say you own a rental property that nets $10,000 before depreciation and amortization. Let's also assume that your depreciation and amortization totals $8,000. This leaves you with $2,000 in net taxable income. If you are in the 37% tax bracket, you'll pay a tax equal to $740. But when you compare that 740 to the amount earned, 10,000, you see an effective tax rate of only 7.4%. If you earn that same 10,000 in earned income, you would need to spend money in order to reduce the amount subject to tax. Otherwise, you'd pay $3,700 on the 10,000 in earned income, assuming you're in the 37% tax bracket. With rental real estate, you don't have to pay for depreciation each year. It's a phantom expense that you get to claim. That's why passive income beats earned income from a tax perspective every time, basically. So, while you may earn a smaller percentage on your rental income per year, as far as like ROI, you can kind of balance that off with the taxes. Rental property falls into this passive income, and it's one of the few ways to, obviously, as I just explained, completely reduce your actual taxable income with depreciation and amortization. I'm no expert in this stuff by any means. When the time actually comes for me, I'm going to obviously sit down with somebody I feel is knowledgeable. I'll definitely shop around for a CPA, maybe work with some attorneys, anything like that, to try and set up a company. If you hold your assets under an LLC or an S corporation, something like that, it's another way to, basically utilize some tax advantages. The sad part about all this is that, I don't know if you guys have heard, but there's this guy, Robert Kiyosaki. He wrote Rich Dad, Poor Dad. He also does the cash flow quadrant. So if you want to learn some more traditional finance in depth, this guy is great to follow. He also has a YouTube channel, so check it out. It's called the Rich Dad channel, I believe. But anyway, he teaches people about these 4 different cash flow quadrants, basically. So you can be an employee, self-employed, where you own your job, a business owner, or an investor. And he said the goal of life is essentially to move through these 4 different tax brackets, and that you have to go from employee to self-employed to business owner to investor. I personally guess I've just leapfrogged over into investor. I don't know if that's going to bite me later on, or what he even means by how you have to move through all of them. But anyway, basically shows how being an employee is the worst tax bracket, it's the second to worst. Self-employed, he says you get taxed up to 60% of your income if you're like a business owner. Something that I didn't know either until I started listening to him. But anyway, getting a little off topic. The point is, when you're earning your income, you're sitting over here in this employee bracket, and you pay a lot of money in taxes. So I don't necessarily have an exit plan like this, where I'm going to sell at each little point. I have more of a long-term perspective on this, as well as, I'm going to kind of play it by emotion. Sorry, video stopped recording there for a second. So, not emotion, but more so intuition. So, as I said, I've been around in crypto for a little bit now, and I kind of get an idea based off of feeling, where we are in this cycle. As I've mentioned before, this Wall Street cheat sheet definitely works. You can tell whenever you're talking to your friends and family, everyone's along with you. When you're going through this thrill and euphoria, everyone's texting you, talking to you, calling you, about how great you're doing, this and that. So I think, whenever I'm starting to see signs like this, and, everyone in the world is, how do I buy crypto? People that don't invest and stuff like that start hitting me up again. It's happened to me before. That's where I'm going to start looking at, my exit strategies. I'm not going to write it out in stone right now, because I don't know what these prices are going to look like. And, I honestly don't care. I think I'm going to be, pretty decent at being able to know when we're at least getting close to the top. We'll see. I'm playing it more by ear and intuition, essentially. So, but with that being said, also, if you just do the math, each time, I think you can go off of this as well on when the next bear market might come, if not anything else. And each time Bitcoin went through a halving, it's topped out basically a year and a half later, right around Christmas time. So did it twice. Halving back here, topped out in November of 2013, right after the halving, which was a year prior. Same thing over here. You had the halving in July of 2016, and then December 2017 it topped out. So we just had another halving here in 2020. So maybe December 2021, if cycle repeats itself, that's when you would want to start looking to get out. So exit strategy. Honestly, I'm just holding right now. I don't have any set strategy. But when I do decide to exit, I'm only trying to buy more assets. I'm not trying to go to cash. I'm not trying to, just have a big old bank account. That's not the goal. I'm not trying to buy fancy cars either. I'm trying to buy some rental property. So that's my end goal. I'm trying to invest in real estate because I just want to buy more assets that are going to allow me to, and live the life that I want to live. And that life I want to live is not going to involve going to work every day, fighting for this earned income, this 9-to-5 money. I've never been about that. I'm opposed to that lifestyle, and I've always been trying to find a way out. So I think crypto is the way out because you got this little tiny little speck to put your money in. This bucket can grow into one of these easily over the next 20-30 years, I would say. So that's why my money's here. I'm playing it by year, but I'm eventually trying to move over here into this real estate bucket, and that's where I would like to really basically settle in. So I have a lot to learn there on my own, for sure. I don't know a lot about real estate, and that's something I'm going to have to start educating myself on so that when the time comes, I actually know what's going on. Also, need to work with, like I said, a CPA, attorney, something like that, and kind of actually figure it out. You don't want to just make all this money and not know what to do with it, because I guarantee you'll lose it just as fast as you gained it. But that's all I got for you again today. As always, please like, subscribe, share with your friends and family, and stay tuned for the next one. Thanks.
What is a cashless society? What does it actually mean in a literal or high-level sense?
Money will become like these, relics of a different age, and will only be found in places like this. In other words, hard cash will disappear. It will become electronic, transferred by things like these.
Then Tracy is in Beijing to show us what a nearly cashless society actually looks like. Ben, good morning.
Mobile payment transactions in China reached a cumulative total of 277.4 trillion RMB in 2018, ranking #1 in the world, according to the recently released statistical report on internet development in China. As of June 2019, online payment users in the country reached 633 million. The cashless society is now approaching.
When's the last time you paid with cash? Well, chances are cash has taken a backseat to the plastic in your wallet and smartphone pay apps.
Denver 7's Ryan Luby explains the digital pay revolution and why not everyone is on board.
The cashless society, the cashless society.
The cashless society.
The cashless society is now approaching.
The cashless society.